if you want to have a lifestyle of financial freedom, which I believe everybody would love to, we hear it all the time, generational wealth, financial freedom, it starts from how you're making those small incremental habits today. And some of them could be sickness, God forbid, nobody wants to go through these things, but let's be realistic, this is just, you know, flesh.
So tell us what you do before we continue. A study by Legal and General found that 87% of parents with children aged 6 have discussed money issues with them due to the economic challenges. The figure rises to 96% among parents of 12-year-olds. Today, I'm really, really excited. I have a money expert. I think I'm going to call her that, a money expert. Phillippina Prempeh of Miss Money Matters UK. Phillippina has explored the UK financial services market, working directly with the FCA regulators, retail banking and wealth management. Despite it all, her focus is simple: families to be best prepared for life's eventualities and plan ahead. Hello, Phillippina, how are you?
I'm blessed, I'm very well, thank you.
Thank you so much. I'm fine. I'm really, really excited about today. Thank you so much for coming.
Thank you for having me.
This discussion is going to be juicy and funny, I think. So, money. I personally think that money is something that people are starting to not shy away from.
Of course.
Because it's in your face, the abundance of it and the lack of it. And I think people are now becoming more truthful and reflective of the impact it has on the family. So today we're going to be discussing that. So my first question for you is, what would you say the role that finances play in planning a family?
Finances is the actual bedrock of how fruitful a family lifestyle can become, because income is essentially what we wake up in the morning to do. If you have goals, if you have ambitions and stuff, there needs to be some kind of sustenance to that, and that comes in the form of money. It's not the be all and end all, but it kind of is. If we dig deeper. So for families, depending on what kind of standard of lifestyle you're interested in sustaining, you must think of what level of financial backing is going to be able to support that lifestyle.
Wow. So when two people are in discussion about starting a family where having children, and they're speaking about health, they're speaking about their desires, where they want to live, it's quite obvious that finances play a big part in that.
Absolutely.
But how would you start that conversation? How would two people start that conversation? Would they start it with, let me see your pay slip? Or would they start it with, what value does money have for you? How did you grow up? Where do you think that conversation should start from?
So in terms of building a family, you need to know the kind of person you're dealing with in the first place. What are their deal breakers? It could be, we want nothing but the best, and that may mean, okay, I actually do want premium education for my children, and therefore I don't want to compromise. And so what that may mean is having some kind of support financially towards these large lump sums that need to be paid every term for private schooling, for example. So somebody else's goal may be extracurricular activities, you know, and even that takes up quite a lot of income. So if you've got a child, for instance, who's doing, I don't know, ballet on Monday, swimming on Friday, and also maybe learning another language, which is also tutoring, that's all going to cost money. So you've got to just think about the lifestyle ahead. Just picture the lifestyle. Because all it is, money is just paying for the lifestyle. So as you're coming together, what kind of lifestyle are we bringing these children who didn't ask to be born into? Is it a lifestyle of struggle? Or is it just going to be what the government provides standardly? They're lucky to be born in the UK, done. Or is it going to be exceptional? So it's all about, it's subjective, really.
It's subjective.
You've got to kind of think, what is my goals? What are my aspirations? So it's subjective. I couldn't answer for somebody else, but you need to know, okay, are we aiming high? Can we afford to now?
Yeah.
Maybe we'd settle for something that's more affordable now, and then in the future, gradually go up. But all of it requires
money.
Of course.
And I know this may seem like a basic question, but for some people it may not be. Do you plan based on what you have now, or where you think you're going in the future financially? Because I think sometimes unconsciously people actually plan for where they think they're going to be financially.
Okay. I think it's, for me, I'm a future planner.
Okay.
And that's the kind of financial services I specialise in.
Yeah, that is true.
In eventualities,
Yeah.
what could the future look like? No one expected COVID, for example, to come and just take so many lives and transform the working industry as well. However, it did, and nobody saw that coming to the and having the impact that it had on the UK.
Yeah.
So always think future, because today is something that you can manage, but future you may not be able to. You don't know what's going to take place. So I do think financial planning in its best format is to always think forward, think ahead.
Okay.
Yeah.
But then the thinking ahead for some people, is it realistic or is it wishful thinking? I think there's a thin line between people having something now and thinking, okay, in 5 years' time, this is where I'm going to be. So I can start this now because I know in 5 years' time I'm going to have this money. So I guess it's unpredictable.
It's just like the same kind of principle behind investments, for example. It's an appetite to risk. What is your appetite to risk? Are you just thinking safe? Are you a frugal person who's just thinking today, I just want to worry about today, I just want to make sure today looks good? Or are we thinking, okay, let's cut down on today, but put forward something aside for tomorrow?
Okay.
You know, so it depends on the individual, but my advice will always be think future, have a standard for your everyday, sort of live below your means, but do plan and set something aside for eventualities. Have a defensive mechanism in place for your money. And for me, that would be what I specialise in at the moment, and that's insurances and protection, because that's the bedrock. Some people, believe it or not, are going to work with the hope that one day they'll get that deposit. They'll be able to save up for that deposit.
But then that's what people think when you talk about planning for the future. It's a one-day wishful perspective, not a, okay, I'm building, so let me live below now and put this in, and I know I'm going to get a better job and then add to that. For some people, the thinking about the future is, it will come, it will come, it will come.
But that's a bit naive when you haven't put anything in. Where's the plan behind that? Is it just a thought that one day it will happen? It needs to be. There's a process to everything. Even, for example, if you were to go and take out a mortgage, for example, you would have had to have had a history of good credit in order to show yourself favourable to the right mortgage lender who will offer you the right deal in order for you to maintain that non-stressful, you know, payment every month to your mortgage provider, in the sense that, you know, if you want to have a lifestyle of financial freedom, which I believe everybody would love to, we hear it all the time, generational wealth, financial freedom, it starts from how you're making those small incremental habits today. That would be
true.
Yeah,
that's so true. So you just touched on a bit about what you do. So tell us what you do before we continue.
Okay, so I've worked in personal finance since 2007, just before the banking crisis. Yeah, there was a major banking crisis, showing my age, But so I was working for HBOS at the time, and that was Halifax Bank of Scotland. It later became just Halifax, and then, you know, Lloyds Banking Group with the government bought them out, and here we are today. So when I was there, I just noticed so much things, like how elderly people were coming and save for their grandkids, and I just thought that was so sweet. I used to build a rapport with some of these people, and they would always be keen on knowing what's the interest rate, and just comparing it to what it used to be before the banking crisis. So I've worked there, and now I've moved on. I've done so, like I've mentioned, I've worked for the regulator, the FCA. I've also worked for wealth management as well. But now I'm doing what I believe is so much more important for and impactful for my society. And my community, I feel, is to represent and to talk about how best to protect your finances, because even there are some guaranteed in the course of the life, right? There are guarantees. Some of them could be accidents, some of them could be sickness, God forbid. Nobody wants to go through these things, but let's be realistic. This is just, you know, flesh and lifestyle choices. Some of them are good, some of them are bad. We're all humans, can cause things to happen. So with regard to just educating people to know that these opportunities are here to safeguard your family if you, as a breadwinner, were to be hindered by either sickness, accident, or death. None of us are here forever, believe it or not. It's sad to think about, but so it's about really thinking about, if I can't get up to make that money, what can I utilise aside from the government to support the lifestyle that I've already created.
So how do parents protect that lifestyle that they've created for their children in your line of work?
Well, it would start by having a conversation, just to do sort of like an inventory of what life looks like now.
Okay.
Yeah.
Would they do that practically? On paper, online?
Well, are you asking for, like, with me, or just... Okay, yes. So with me, what we do is just we'll have a review of your general lifestyle and your family and what your commitments are, where you are income-wise, and how we can potentially safeguard your income. Are you the only breadwinner, or is it a joint income household? How many children are dependent on that income? What would it look like if that income was to stop? How would it affect their lifestyles? Just sort of drawing your attention to the dependencies more. I'm a mum, so I kind of feel like, you know, as a parent, our children didn't ask to be here, so we also have like a good father or mother would want to just give their child a fruitful life, and it's our duty of care and responsibility to ensure that even if we're not here for whatever reason, that whoever comes on board is not going to be burdened, and that the children still have that fruitful life. And by so doing, putting a policy in place that gives them that financial backing will be a legacy of what I did with my wisdom when I was alive. So it's a form of just, and I do believe it's something that we have to also teach the children as well, that this is what I've done for you, and so they then repeat it to the next generation.
So they start knowing that it is a value and it's a culture to upkeep.
Definitely, yes.
It's really, really good. What I wanted to ask you is, when you are doing your consultations or you're meeting with families, are you noticing that some of your questions are allowing parents to be a bit reflective of their lifestyle?
Absolutely.
When you answer them, okay, so who are the breadwinners? How much you spend on this?
Yeah, because
do you sometimes see that they're like, oh, actually, I actually have to think about this. I thought this was just putting money aside for my children. I didn't know that it's actually a work in progress. That what I do today is as important as what I did yesterday.
Absolutely. I mean, I had a client who recently took out a mortgage, and the whole idea was that I just need to cover this mortgage loan, because a mortgage is literally a lifelong loan. It's taken from the word mortgage comes from the word mortuary, which is all linked to last, finish, stop, death, right? So they wanted to just protect that mortgage, meaning that if they were unable to keep up with the payments of the mortgage for either serious illness or death, only illness or death, that's when the policy will pay the full amount of the balance of the mortgage. For the mortgage, not for the children's lifestyle? Not for the lifestyle. Okay. So it's an insurable interest, and that is the mortgage, and that is the home, which is an excellent thing to do, mind you, because then the home is paid for. And then that asset will now move on, hopefully, if it's been put into trust, to the next of kin, either the spouse or whatever, or the children. Do you get what I mean? So that's a good way to pass on and transfer asset. That's so interesting. There are actually different ways, to be honest, because I think there is a group of people that only know about
just about life insurance.
There's
Not knowing about you can actually put policies on your properties that you're toiling for your children, to house your children. So if anything happens to
then
you,
they're mortgage free.
Yeah, and their house, they have a house.
Exactly.
That's so interesting.
It's good because you've got to remember that the biggest expense usually when I do my consultations, we go through income and expenditure, is usually your rent or your mortgage. That's the biggest expenditure. So if that's taken out the picture for the next person, then they've got more surplus at the end of the month
to look after your children.
Yeah, or to do whatever. So, but then the hindrance there is that it's only covered that one thing, that insurable interest. What about the lifestyle that circulates around in that home? What about the transportation, little things like transportation fees? What about the gas and electric? What about, what about those maybe private school fees? What about the deposit, the student loan when they get older that they may have to incur? But had they been a life insurance policy which is entitled to them via a trust, they can access that, and then they could be student loan debt free, or they could use lump sums to just start to purchase their own property,
And these are things that you recommend parents think about as soon as they give birth, or as their children are growing, it depends?
I think for the children, like just protecting your lifestyle and your income is something you should do even before the kids have arrived.
Okay, start that culture.
Yeah, because kids are expensive. I believe it's 180 something £1,000 to pay for just an average sum total of what it is to raise a child in the UK. And that's subjective. Some people may not be into like holidays. Some people want to go on holidays with their family at least 3 times a year. So I think it's about just dotting your I's and crossing your T's with some basic financial planning ahead of what I believe children are they drain their income because they're very expensive.
Yeah. So if you start before you actually have the mental capacity to actually maintain it, then starting when they come,
then it's not like you're bringing them into a situation that potentially could be a struggle, but you're just sort of in survival mode with them, trying to get on with life. Meanwhile, if there is a perfect plan in place, maybe having a policy as young as possible so that the premiums are cheaper. So then that's one thing that's done efficiently, and covering your home with a protection plan if you've got a mortgage attached to it. And then also you've essentially got yourself covered as well. So then when they come along at any time, they've got guaranteed inheritance.
That's so interesting.
Yeah.
Okay, so I'm just going to give you a dilemma. You don't have to go into it because, this is what you do. People can contact you. So there are two people who have met. Maybe one is 30, one is 35. And they haven't got, one of them has life insurance because they just saw that's what their parents did. So they have life insurance based on their health, their salary, and one hasn't. But they're interested in consulting you about policies, about insurance. They're just about to buy a house and they do plan to have children. What kind of plan would you recommend for them?
Okay, so, and they're a couple?
Yeah, so they've decided, they're a couple. So they're married, we can add that. They're married.
Okay, so
newly married.
Newly married, joint mortgage, I'd say. And they're just about to buy.
Yeah, no, so they're homeowners. We can say they're homeowners. Yeah, new homeowners. New.
Any children?
Not yet.
Okay, so what I would advise them is to protect their income.
Okay.
Income is paramount for them. Not everything is death. Even though none of us are omnipotent, what's the word? Immortal.
Immortal, okay.
But not everything is death. We'll talk about that later.
Okay.
But for now, for those two, they are essentially 38. They're in their most prime years. They're in their best labouring years. So what they should do is protect their income. I don't know what job they do, but not all jobs offer a good income protection or statutory sick pay, let me call it that. So,
thank you.
Right. So when we have somebody who's in the NHS, for example, they're a little bit more favoured based on my experience, because those people or civil servants tend to get at least maybe 6 months full, which is very rare, 6 months full pay. I've met a lot of people who just get 3 weeks full pay and the rest is half, up to 3 months. Now, if somebody, in the worst case scenario, if that couple, one of them were to suffer a critical diagnosis, I'm not sure if you know that I think it's 1 in 3 people are subject to the big C, cancer. So if one of them were to suffer a critical diagnosis, as in a cancer, for example, do you think that same person is going to be giddy up in the morning, I'm going to work, I'm going to work? No.
Life happens, children come into it.
First of all, you're going to be mentally, you're going to be like, wow, has this really happened to me? Did I just really hear right? Is this right? You're going to find out, you're going to go through all the testings and the treatments, and that's going to take time away from you getting into the office. Yeah. You don't want to work. You want to be treated, and you want your health back. You want your restoration of your health. So in that capacity, who's going to pay for that income? That the mortgage still needs to be paid, the utilities still need to be paid. So who's going to come in and say, okay, because unfortunately you've said to me, of course you've been diagnosed with cancer, therefore I'm not going to charge you for your utilities. It doesn't work like that. You still have to. We still have to pay for our expenses. So we're still liable to pay for these bills. So in that capacity, an income protection policy is something that will pay out up to 70% of that particular person's income.
Oh wow!
Yeah, and that could be for the term of the policy, which will mean until he's retired, which is an option. Another option would be for the first 5 years. Another option could be for the first 2 years. But what it does is it pays out essentially 70% of your gross amount, which will still be quite close to what you get as a net, for you to be able to pay your essentials, your mortgage, your rent, your utilities, your transport, your petrol, your car finance, whatever, your lifestyle.
And that's even before, because the dilemma was they hadn't had children yet.
So that's why income protection is paramount. Income protection is paramount. And if they're self-employed, it's even more paramount.
Okay, that's
because
really
self-employed people have a risk for appetite. I like people that are self-employed. They're go-getters. They take a risk because they're not relying. They don't have the benefit of the employee's salary coming every 27th. It's what they put in is what they get out. So someone who's taking that kind of risk in business needs to be able to have some kind of contingency in place for their income, because when we even throw children in the mix, it's a bit unfair, you know, to leave that kind of risk. So what I do in my meetings or my consultations with people is to draw their attention to these areas, to these gaps, because nobody really talks about this. We're not taught about this.
That's really interesting.
Yeah.
I think that's really, really helpful, because it goes back to your point where you talk about starting before you have children. Yeah. So if a couple have already done that, that is a couple that they will have a trust fund for their children. They will protect their house. They will protect a certain amount of finances for their children. So my next question is, what are child trust funds?
Okay, so there's so many different ways of looking at trust funds. I remember growing up, I used to watch the Hilton Sisters. Show you my age. I used to love watching them and them being dainty, and everyone used to say, oh, they're trust fund babies, they're trust fund babies. Now that's because their parents had a wealth, like they come from a legacy of people who had an estate, which was passed over in trust to the next generation. And so from generation to generation, there's been this protected amount of income which is attached to their surname, attached to them, which has their name on it. And they are heiresses. Remember, they were called heiresses, so they were beneficiaries. They were guaranteed beneficiaries. So what we can do, so that's the whole sort of glamorous name attached to trust fund kids. That's how I remember it. But if we bring it down to layman terms, in terms of insurance and how we can create a trust fund for our children
and ordinary people,
how that works is simply taking out an insurance policy. Okay. And then doing what most people do not do and forget to do, but it's free and part of a service, hence why you should speak to an advisor, because if you do it yourself, you wouldn't really know, you're not encouraged, that the providers are not encouraging it as much. Okay. Because it sometimes can be a little bit tricky to complete the form. So what we will do after we've done after the policy has gone through and it's live and the policyholder is covered with a large lump sum, let's say $500,000, 500K, we'll do what we call a trust form. And a trust form is available to all, and you would request that, and you will now be able to stipulate the name of who you want the beneficiary to be.
Okay.
So if it's your children, or if it's your half-sister, or if it's your spouse, you would have a beneficiary for who this 500K is going to. Or let's just say you've got 2 kids. You probably would make, as a married woman, you probably would make your husband the trustee. The trustee is not the beneficiary, it's just the person that oversees the lump sum to the beneficiary.
Okay.
So the trustee is like an executive or an intermediary that would ensure that this money essentially is going to make sure it gets to the right person. So the beneficiary would be for example, I'm going to use an example of a person having 2 kids, and they'll say, okay, they'll write their full name there, and then a percentage amount, so 50%, meaning that one child is going to get 250K, and then the second child is going to get 250K. So no matter what happens when the policyholder passes away, there's not going to be any uprising from any third member or any third party or any unfriendly family member that wants to rise up and say, you know what, I believe that there's a policy in place and I'm deserving of this. It just mitigates all sort of confusion, and it bypasses probate, because sometimes probate can be quite stressful for people who have lost a family member.
What is probate for people who don't know?
So probate is the ability to be able to access a loved one who has deceased assets, whether it be their bank account, whether it be their savings, whether it be their investments. So it takes some time before that access is released. Sometimes it can drag on for years. But when you've got a policy, when you've got a trust document in place, which itemizes somebody's name and even stipulates the amount of that lump sum that they're deserving, it bypasses all of that issues. And then it also does something beautiful, which is it's also covered by, it's not included, your insurance policy, that lump sum is not included in the deceased person's estate because they have a trust.
Oh, okay.
So what that means is that the government cannot tax, because there's a death tax called inheritance tax, and that's 40%, which is almost 50%, which is a large figure.
That is a lot. Every time I hear it, I go, oh my gosh.
So there's a lot of benefits to doing a trust. It's free, and it just bypasses any arguments. It makes everything simple and short. It's like a mini will around that money, around that policy amount. And it also covers, it's protected against the inheritance tax. So it's a no-brainer.
Do you think it's important for people who do trusts to be transparent with their children when their children get to a particular stage? Because you mentioned that someone can have a trustee and a benefactor. So do you think it's important for parents when their children get to a certain stage, or when their firstborn gets to a certain age, for them to be like, okay, this is what I've done for you guys. We're not going to discuss this all the time, but this is what I've done, and this is where it is, and this is the trustee.
I think when you as a parent or a mother realise that your child is of the age of maturity, it doesn't have to mean that because they're 18 they have to know.
Yeah. Not
everybody matures at that age. I think it's a bit healthy not to make that particular policy and that lump sum the focus.
Yeah,
you know,
because then it can become an idol at times.
Thank you. So there's no need for it to be the focus, but it's also good conversation to sort of use as a sort of something quite educating to discuss about financial planning ahead, and just to talk about the eventualities of life that could happen, and if that was to happen, this is what we've put in place for you.
So with trust funds, can the children only receive them once the parents have passed on, or can it be a certain age? So when my child is this age, whether or not I've passed on, they can receive this, or are there different type of policies?
So the policy holder must have passed.
Okay, for trust.
Or be terminally ill with less than 12 months to survive.
Okay.
So that's the only way that wealth transfer can take place.
Oh yeah, that's true. Yeah.
However, let's just say the child is 4 years old. They're not going to be able to access on that money yet. So the trustee will now act on it. Or there are trusts whereby it has to be that child reaches the age of 18 before they can access that lump sum.
Which is reasonable.
Yeah. So, you want some kind of maturity with large amounts of money, especially when you're passing it on in your absence. Yeah.
It's a lot of thinking.
It's
a lot of information, a lot of thinking. But again, I think it's important. I think we speak about development, we speak about school, we speak about community, all aspects of raising children. One aspect is leaving a legacy for your children at whatever level.
At whatever level.
Yeah, at whatever level. I think sometimes people think, you use the Hilton's as an example, where you have to have billions or thousands to do it, or millions to do it, let's say. But I think even appreciating what you have, the value that you have now, and wanting to pass it on to your children is very important.
Absolutely, absolutely. Because like I just wanted to mention that not everybody will have the ability to actually go out there and become homeowners.
Yeah.
So if somebody who hasn't got that opportunity, maybe they wasn't introduced to savings early on, or their income just could not sustain it in their working years, but they did take out an insurance a life insurance policy. That policy, which is worth hundreds of thousands, could actually be that wealth transfer needed for that next generation. Just that one policy that they took out could be life-changing. It's a game changer for them and their family. But usually, we are sort of taught to go to work, earn an income, buy a property, and then you've sort of made it to some extent. But it's not one case fits all for everybody. But if that's not something that can work for you, consider perhaps having an insurance policy that you can just take out and perhaps do a trust to ensure that it goes to the right people. And that's still a guaranteed event. We are all going to go one day. So in that situation, there will be that lump sum transfer whereby they can use some of that to do a deposit and buy a home.
It's so important. Really, really important. We've spoken a lot about the legacy side of things and the leaving behind side of things. But what about the now? What do you think are the important things when it comes to finances that parents should be installing in their children from now?
One of the sweet things that I like to do with my girls is teach them that money is earned.
Okay.
Yeah, we earn it. So introducing small chores for them to do in order to earn an income. And also, because children, they're very much visual. They see, I want this, I want this, I want this. Okay, how much is this? I could easily buy it for them. However, I want them to know the value of money. And then also, let's see if we can earn that. Even if you do half, if you make half of that, I'll top it up. But let's use time, because it's a process as well, and to be patient with money, because that teaches them how to perhaps invest and wait for that compound interest in order. So for me, it's more about learning the value of money, number one, and then being patient in order to get what you desire, not to be so impulsive when it comes to spending.
Because people are.
Even me as a woman, I can be impulsive. So we teach you that let's calm down. We can get it, but is it a need? Is it a want? Those kind of things. And then also saving is also important. So the money that I'm giving you today, how much are we going to spend and how much are we going to put aside? And being excited to see that money grow.
Okay. So with your children, do you do it physically, like in a piggy bank or an account?
So there's so many, traditionally, I have my eldest, which back in the day, he came before all of these things like Mr. Go Henry and all of those. There's these little cards now where they can feel like, like a little adult and go and check their balance and so forth. But I believe in traditional, put your money in a piggy bank for now. And then when it gets to a certain point and we've cracked open the bank, the little tin or whatever, then we can take it into your bank account. I believe in showing them their bank statements, and so that they can know that although we can't physically see it, our money is growing somewhere. And then also just valuing the whole concept of money by giving them chores or something that they do. It could be, oh, you've got 10 out of 10 on your spelling test, you're going to get a £5 for that if you continue each week. And then it's just an incentive for them to just, you know, if they want to buy something, then they know the value of the money that it costs to get that particular purchase, and then they've got that drive for it as well.
I like the piggy bank idea, especially for children under 10. Because again, you spoke about children being visual. So they see the coins, they see the notes, and it's something for them. You're not going to take it, and they pull it in themselves. They put it in themselves, and it's theirs. And then you open it together, you count it, you go to the bank where you can, and you show them, or you buy something with them with that money, so they know the piggy bank's empty, but I've got this. I think, small things to teach children of their awareness. Because sometimes we speak about money, but even the awareness of money. I remember when, you know, I was young and I found £1 on the floor and I was so excited and my dad was laughing at me. It's just £1, but it was the awareness.
It's the awareness that
it was the awareness of money.
So many of sweets, right?
Yeah,
it's
back in those days.
So back in those days, you'd be like, oh my gosh, you know how many sweeties I could buy with this £1? And just even like taking all the penny, like I teach them to respect the coppers. That those, if we gather as many as possible and we go and we exchange it, you'll see how much pounds that converts into. So just respecting the small amounts as well. I think because my girls are under 10, and it's really good for them. Now, if I say that I'm borrowing their money, they cry. Don't touch Tooth Fairy's money.
So you don't keep the money for them when their relatives give them money?
Oh, they ask for it. They ask for it. They are they understand money, and they all really remind me of it. Yeah, and the Tooth Fairy money, I remember one time I said, the Tooth Fairy gave me money. We kept it in an envelope, and I wanted to borrow it. They went ballistic. They was not having it. They need their money with it.
That is so, because kids learn by observing. Practicality.
Habits.
Practicality, But then my next question is, how do you give your children memorable experiences as well as saving? So not everybody can go to Disneyland.
You just got to be savvy. I'm a savvy mum. So I have multiples, and that's an expensive one. So I've got twins, so it's quite an expensive. Everything I do, I have to do twice. So I'm always looking for a bargain. So how do I give them, what did you say, sorry?
Experiences. How do you give your children lovely experiences, childhood experiences, as well as actually saving and policies and insurances?
I think you've just got to be creative in the way you give them experiences, and just being mindful that not everything has to be glitz and glam.
Luxury.
Luxury, it's a fallacy. You could do things like going on a London hopper. You know, in my day we used to have the hop on, hop off bus. They don't have the luxury of that. But you could actually go on one of these tourists. For example, I've done that with my girls and they loved it. And we live in London, but just giving them that experience of going around London, seeing Buckingham Palace, seeing the sights, that didn't cost too much. But the memory that they have of being on a bus that has no roof, on a sunny day, seeing things that they talk about in school, like Tower Bridge, Westminster and Buckingham Palace, and being able to point, see and visualise, they speak about that all the time. They're like, oh, Mum, remember we went there and how that didn't cost me more than £30. Do you know what I mean? So it's about being creative in the way you provide experiences for your children. It's also a subjective question because everybody's income is different. So what the next man can afford to do is probably different for the next person. But I think just also setting aside what we call a leisure account, because when I do income and expenditures, we do go out and watch movies. We do these things. We do have to factor in, okay, I've gone to a party, I may buy a gift for the celebrant who's just a little girl, and you know. But what you need to do is just think, okay, so for this month, if you're budgeting, what allowable amount am I going to allocate for this month's leisure? And just using that. There's so many options now online for you to look into. And planning ahead. If it's a family holiday, plan ahead. Yeah, planning ahead and just utilising the big wide web as to where you can get great deals. Me, I do that. I have to do that all the time because
I can imagine.
It's double.
I think my next question is, sometimes you'd have to say no, right?
Of course, you can't give them everything.
I think some parents feel like you have to say yes, 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 or else their child is missing out. What would you say to those parents?
You're creating a narcissist. Oh. You can't. I think that's a bit scary, but I think that's a bit of a bold statement. But don't beat me. But I believe
traits, maybe. Yeah.
Yeah, you are.
Or self-centeredness. We can soften it.
What is a self-centered person over years? So that's the thing. I think there's times when we can do. I mean, it's all subjective on how your parenting style is. Whether it's gentle speaking, whether it's harsh, whether it's stern, whether it's firm. I wouldn't encourage you to just show your love through just providing everything for that child, because that's not the way the world works. What happens in a time of crisis or eventuality when the income is not there?
Yeah,
it's all about patience, and it's all about, you know, teaching, just setting up your kid for the real world, essentially. Setting them up for the real world and just allowing that to reflect in your parenting and how you use your finances. And spending doesn't have to be the only way you demonstrate love to your child.
Spending doesn't have to be the only way you demonstrate love to your child.
At all, no.
And I think we'll leave it there. Thank you so much. But before we end, please do tell the parents where they can find you.
Okay.
Yes, and how they can book a consultation with you.
Okay, so you can find me at Miss Money Matters UK _UK on Instagram. There are links in there in order for you to speak with me directly, and you can also find me on LinkedIn, and you can find me on TikTok too. Thank you.
Thank you so much.
You're welcome.
Hello, welcome to the Parent Advice Hub. My name is Lisa Ogbeide. Please do subscribe and follow us on Instagram at the Parent Advice Hub. You can also check us out online at www.theparentadvicehub.com. Thank you.